Budget 2024 has done away with the contentious angel tax on startups and small businesses. Experts say that this move is likely to bring considerable relief to both early-stage startups and their investors. How? Let's first take a look at what the angel tax really was. Angel tax was simply an income tax levied at the rate of 30.6% when an unlisted company issued shares to an investor at a price higher than its fair market value. That brings us to the question, how does one calculate the fair market value of a company? The sum total of the market value of all the tangible and intangible assets held by a startup or closely held company is its fair market value. Therefore, when an unlisted startup gets equity investments from residents of India for issue of shares that exceed its face value, the excess amount is subject to income tax at the rate of 30.6% under the heading Income from Other Sources for that particular financial year. So, why was the angel tax introduced in the first place? It was introduced in 2012 in order to deter the generation and use of unaccounted money through the subscription of shares of a closely held company. Sounds fair. Why has it now become an impediment for startups? To understand that, let's look at the phrase fair market value. The angel tax becomes an additional liability on startups receiving investments above their company fair market value. These investments are really lifelines for early-stage startups grappling with consistent funding for survival in highly competitive marketplaces and business environments. Startups, by definition, are required to cover a huge distance in their break-even journey in a very short period of time. Constant funding, when money is being spent on market capture and customer acquisition, becomes a matter of life and death for startups. An additional burden of 30.6% only makes things worse in an overly cutthroat competitive marketplace. If things were not bad enough, in 2023 this tax was extended to investments from non-residents as well. Some relief was provided by the government in 2019 with an exemption from this angel tax so long as the turnover of the startup was over 100 crore rupees and the paid up capital and share premium did not exceed 25 crore rupees. Businesses take time to hit the 100 crore turnover target, and that means the exemption failed to provide much relief to most entrepreneurs struggling with their early stage startup ventures. With unicorns drying up, there have been just 3 new ones in 2024 so far. The removal of the angel tax could just be the game changer the startup ecosystem has been long waiting for.